Hey there, and welcome back to the Deep Dive, brought to you by the Stock Talk team.
Great to be here.
You've probably been hearing a lot about PDD holdings lately, maybe seeing the ticker pop up and wondering what's really going on beneath the surface.
Yeah, lots of chatter.
Exactly.
Yeah.
So you asked us to dig into their recent Q1 2025 financial results, and, well, that's what we're doing today.
We've got the official report right here for the quarter ending March 31st, 2025.
And if you find these kinds of breakdowns useful, for cutting through the noise on companies you follow,
Which we hope you do.
definitely make sure you're subscribed to the Stock Talk podcast feed right now. Hit that like button, too. Maybe share this with someone else who'd find it interesting.
Yeah, helps us out a lot. Okay, so PDD's Q1. Our mission today is really to get past just the raw numbers and understand the story they're telling.
Right. And there's this really interesting tension, isn't there, between their revenue growth and this pretty sharp drop in profits.
That's the core puzzle. It really stands out.
Okay, let's jump in that. Top line numbers for Q1 2025. What are we looking at?
So revenue actually pretty solid. Total revenues were up 10% compared to last year.
Okay, 10%.
Yeah, came in at RMB 95.7 billion. That's about 13.2 billion US dollars.
Which, in what they call a challenging environment, that kind of growth still shows people are using the platform.
Definitely shows activity, yeah.
Okay, so 10% revenue growth, positive. But then, like you said, you look a bit lower down the income statement and things change.
Yeah.
Operating profit took a hit.
A big hit, yeah. Operating profit was down 38% year over year.
38%. Wow.
Dropped to RMB 16.1 billion, which is roughly $2.2 billion.
And net income.
Even worse. Even steeper. Net income fell, get this, 47% year over year.
Wow.
Down to RMB 14.7 billion, about $2.7.
So that's the paradox right there. Revenue's climbing, but profits are, well, falling off a cliff seems about right.
Yeah.
That's what we need to unpack.
Exactly. And to get why the profits are down, we should probably quickly look at where that 10% revenue growth actually came from. PDD basically breaks it into two main buckets.
Okay, first one is online marketing services and others. That part grew 15% to RMB 48.7 billion.
Correct. And that's just over half their total revenue, right? 50.9%.
So mostly advertising fees from merchants.
Yeah, exactly. Merchants paying PDD to, promote their stuff, get seen. The growth there suggests merchants are still willing to spend to reach buyers.
Okay, and the other chunk, transaction services, that grew 6% to RMB 47.0 billion, so almost the other half.
Right, 49.1%. It's pretty balanced. This is basically their take rate, the commissions, the fees they get when something actually sells on the platform.
So both sides are growing, and it's like a 50-50 split almost. Shows a pretty diversified setup.
Yeah, and the report makes a point of saying this growth happened despite rapid changes in the external environment, so it suggests some, resilience there.
Okay, so the revenue engine, still running. Demand from merchants advertising, demand from consumers buying.
Yeah.
But if revenue is up, why the huge profit drop? Where did the money go?
Okay. This is where the strategy comes in. And honestly, it's pretty fascinating. This profit drop wasn't an accident.
It was deliberate.
Seems like it. It's the direct result of pouring a ton of money back into the ecosystem. Just look at their operating expenses. They shot up 37% year over year.
37% increase in OpEx is massive. But I remember seeing one line item really jump out. Sales and marketing.
Oh, absolutely. That's the main story. Sales and marketing expenses alone just soared. Up a massive 43% compared to last year.
43%. How much was that in actual money?
RMB 33.4 billion spent just on sales and marketing in Q1. And get this, that line item alone accounted for an increase of RMB 10.0 billion compared to Q1 last year.
10 billion RMB more just on S&M. In one quarter. That's enormous. What did they say they were spending it on?
Well, according to management in the report, these investments were specifically to, and I'm quoting loosely here, support merchants and consumers amid rapid changes in the external environment. And also specifically calling out help for small and medium businesses, the SMEs, to navigate things.
So wait, they're intentionally spending billions more on marketing, promos, support, knowing it's going to absolutely hammer their short-term profits.
That seems to be exactly the trade-off they're making, or at least that's the story they're telling. They're choosing long-term ecosystem health, resilience, over maximizing the profit number for this quarter.
Interesting. And it wasn't just S&M, though. That was the big one. Other expenses moved, too.
Right. Research and development, R&D, that was also up. Increased 23% to RMB 3.6 billion.
Suggests they're still investing in tech, AI, platform stuff. Makes sense.
Yep. But here's a little detail. General and administrative, G&A expenses, they actually decreased by 9%.
Oh, down 9%.
Yeah, to RMB 1.7 billion. It's small, but it's kind of important. It suggests they are looking for efficiencies elsewhere. So the huge S&M jump isn't just like out of control spending across the board.
It looks targeted.
Very targeted, yeah. It
Okay.
seems like a very deliberate strategic move.
Okay, that distinction's important.
Mhm.
And management wasn't hiding this, right? They talked about the strategy behind the profit hit. What does the CEO say?
Yeah, they addressed it. Co-CEO Lei Chen said these investments gave merchants the room to adapt and focus on high-quality, sustainable growth.
Okay, helping the sellers.
And the other co-CEO, Jiazhen Zhao, really stressed building a healthy merchant ecosystem, which they say ultimately helps consumers too.
So they're framing this profit plunge not as a failure, but as an investment, a pivot away from just chasing the next quarter's profit number.
Exactly, more towards sustainability, resilience, especially because they keep mentioning this changing environment.
That's the narrative. And the spending numbers definitely back up a company making a very expensive bet. They're betting that strengthening the platform now pays off later.
Precisely.
So how exactly are they supporting this ecosystem? Like, what does that extra RMB 10 billion in S&M actually buy for merchants and consumers on the ground?
Well, for merchants, especially those SMEs, it probably means things like initiatives to lower their costs, maybe lower commission rates for a while or cheaper advertising.
Yeah.
Plus, sales support programs, PDD funding big promotions maybe, and providing tools, data, things to help them adapt to whatever changes are happening in the market, basically making it easier and better to sell on PDD.
Gotcha. And for us, the consumers?
For consumers, it likely means more deals, bigger discounts, but also efforts to just improve the whole experience. Maybe making the app work better, smoother checkout, strengthening logistics, trying to get stuff delivered faster, more reliably, expanding the range of products you can find. It's about building loyalty on both sides.
So this whole investment phase is about making the platform stickier, more resilient.
Yeah, strengthening their competitive position through that loyalty and, positioning themselves to grow faster maybe when or if market conditions get better.
Okay, that makes sense strategically.
Right.
But funding this, spending billions extra when profits are already down, that takes serious cash. How are they affording this?
This is maybe the most crucial part. The enabler. What's really, really striking is just how strong their balance sheet is.
Yeah.
Despite that profit dip, PDD is sitting on an absolutely enormous pile of cash and equivalents. End of Q1, March 31st. They had RMB 364.5 billion.
Wait, how much is that in US dollars?
Over $50 billion.
Yep.
$50.2 billion in cash, cash equivalents, and short-term investments.
50 billion. With
Oh.
the beat, that's a colossal war chest.
It's staggering, really. And it breaks down to about RMB 70 billion in actual cash and RMB 294 billion in short-term investments. Easily accessible stuff. And what's also notable is that this huge number is actually up from the end of the last quarter. Their pile got bigger. Plus, they have almost no debt. Debt to equity is near zero.
Okay, so that massive financial strength gives them incredible flexibility, doesn't it?
Totally.
They could basically afford to say, okay, forget short-term profits for a bit, we're investing, because they have this huge cushion.
Exactly that. It's the foundation that lets them make these aggressive, expensive moves without worrying about, needing loans or pleasing the stock market every single quarter. It's a huge buffer against uncertainty, too. They're not forced into short-term thinking like a company with less cash might be.
Okay, so they've got the strategy, they've got the money. What did management say about the outlook? Are we going to see more quarters like this one?
Well, they did signal they expect a slowdown in growth rate generally, just as the business gets bigger, matures, and also because of that challenging environment they keep mentioning.
Raised scale makes high growth harder. But the investment side, was Q1 just a one-off?
Doesn't sound like it. They explicitly said future results may continue to reflect the impact of sustained investments in the ecosystem.
So more spending pressure on profits is likely.
Seems very likely, yeah. Suggests this high expense level might stick around for a few quarters, maybe more, as they push this strategy through.
And they keep saying growing uncertainties.
Yeah, that signals they're planning for or reacting to a macro environment they see as pretty unstable or difficult. Their priorities line up with that.
Which are?
Things like ecosystem resilience, defending market share by spending, focusing on quality growth, not just any growth, and trying to balance all this investment with efficiency where they can, like that G&A cut we saw.
And that huge cash pile Means they can potentially keep spending even if competitors have to pull back, right? Like be counter-cyclical.
That's a really key potential advantage here. Their financial muscle lets them lean in when others might have to conserve cash. That could be a way to gain ground.
Okay, so pulling it all together, looking at the whole picture from Q1, what are the main risks and opportunities that jump out?
Okay, risks. Well, the biggest one is pretty obvious. This profit pressure continues for too long. What if the big investments don't really pay off in enough long-term growth or loyalty?
Just becomes a cash drain.
Right. Then there's the macro uncertainty itself. Maybe things get worse, hitting consumers and merchants no matter what PDD does. Competition could heat up, forcing even more spending. Regulatory risks are always there for these big platforms. Execution risk, spending billions effectively isn't easy. And, investor patience wearing thin if profits stay down.
Makes sense. And the flip side, the opportunities.
Well, the opportunity is that the bet works. If this heavy investment builds real loyalty and strengthens their position, they could come out of this uncertain period much stronger, ready for faster growth.
Gain market share now.
Potentially, yeah. Especially if they invest while others cut back. That stronger loyalty could be a lasting advantage. The cash gives them amazing flexibility, maybe M&A, maybe other big moves. Long term, the tech investments could pay off. And there's still international expansion potential, too.
Right. Okay, so let's try to summarize this deep dive. PDD Holdings, definitely in a moment of strategic change.
Absolutely. You can see it clearly in the numbers. They're making a deliberate choice to let profits slide. That 38% operating profit drop is proof to invest heavily in their ecosystem for the long term.
And the main lever they're pulling is that massive 43% jump in sales and marketing spend, pouring money into supporting merchants, supporting consumers, because they see the environment as tough and uncertain.
And crucially, this whole strategy isn't some desperate gamble. It's enabled by that incredibly strong balance sheet. Over RMB 364 billion, $50 billion plus in liquid assets. They have the firepower to make this choice.
So if you're just looking at PDD's quarterly profit number right now, you might be missing the bigger picture they're trying to paint.
Yeah, their definition of success right now seems to be about long-term market position, ecosystem health, sustainable growth down the line, not just this quarter's earnings per share.
Exactly. And it leaves us with that really big question, doesn't it? For anyone watching PDD or just thinking about strategy in these times.
What's is?
Can this unprecedented level of spending actually build enough loyalty, enough competitive advantage to really pay off big time later on? Will it justify this, severe short-term profit hit?
That is the question. It's a massive bet on the future.
It really is a fascinating strategy to watch. Yeah. Well, thank you for joining us for this deep dive into PDD's Q1 2025 results. We really hope this helps you look beyond just the headlines and understand the why behind the numbers.
Yeah, it definitely gives you something to think about how companies weigh today versus tomorrow.
Especially when things feel uncertain. It really is a masterclass, potentially, in using balance sheet strength strategically.
Could be. Time will tell.
Indeed. So if you found this breakdown valuable for understanding PDD or just the market dynamics, please make sure you're subscribed to the Stock Talk podcast feed.
Yep, hit that button.
Liking this deep dive also helps other people discover it and sharing it with friends or colleagues who track these companies. That helps us keep bringing you more content like this.
We appreciate the support.
We'll be back soon with another deep dive, getting into the details that matter for staying informed. Thanks for listening.